At Option Genius, we believe that you deserve freedom, financial freedom, so that you have no more worries and more than enough money. Time freedom, so that you could do what you want, when you want to do it. And choice freedom, to live your life on your terms. But the system and Wall Street are rigged against those little guys. So how do we fight back? Well, my friend, that's what this podcast is all about. My name is Alan Sama, and this is the Option Genius Podcast. Hey, Genius Nation. So I'm still here at the beach, and this episode is going to be kind of like a continuation of the last one. So if you haven't listened to the last episode, it's called Working on Your Business. Go ahead and listen to that one first so you'll have a better idea of what I'm talking about here. If you can't find it, that's okay. You can listen to this one because it's a similar topic, but it's different. So I'm going to go more in depth into this topic in this episode. And so what I talked about last time was, what exactly is working on your business and different ways that you can do it to improve yourself as a trader. In this episode, I want to talk about my trading reviews. So what I do is every so often, I will set aside some time to get away from the office, to go by myself, and to take all of my trading records and then review them to see how I've done over the past, however long it's been since the last review. And so what I want to do in this episode is actually go through the questions I ask myself, go through the things I look at, and then, you can take some of that, maybe tweak your own, add your own stuff, and then you'll see patterns. You'll see ways that you can improve. You'll see instances where you'll have revelations and epiphanies about your own trading that you can tweak to improve. And I'll show you some of mine later on as we go along. So what I like to do is for my review is to go to a quiet place, to be alone. It has to be, away from the office, away from my normally trade for the most part of it. I like to go to the beach, and I like to go on a cloudy day when it's not so sunny and not so hot. And then, just sit back. Either you can grab a chair, sit on the beach and listen to the waves and review everything, or sit in my car with the windows down. And so, I'm, in a sense, old school when it comes to trading and when it comes to record keeping. And I guess old school is better than calling it old fashioned, right? Old fashioned kind of has a bad ring to it. But I'm old school, and so I write everything down on paper. Every trade I do is on paper. So depending on the strategy, if it's a simple credit spread strategy, then I will have several trades on one piece of paper, and all the information for each trade will be there. If it's more complicated, like an iron condor or a butterfly or something like that, then I'll have one sheet of paper for every trade. So that way I have all the information about what happened, what was going on when I got into the trade, what I was thinking about when I did the trade, what happened during the trade, what adjustments I made, why. I keep records, I keep notes of all that stuff. So, and then what eventually happened at the end. So I take all these trades, take them with me, and I like to do this at least at bare minimum should be done once a year. And if you've been trading a lot, you've been trading for years, and if you're doing really, real well, then you go 1 year between reviews. If you are a newer trader, I would do it at least every 3 months. If you're brand new, you should probably do it every month. You won't have as much to go after, but at least 3 months, and then if you're more experienced, then you can push it out to 6 months. I like to do it at least every 6 months, but at minimum I'll do it for a year. And normally, like I said, I like to go out and have it be nice weather outside, nice and cool. So I like to go springtime or in the fall, something like that. And that's just me. But you can go anywhere. You can just go in the kitchen table and do it. You can go to the coffee shop. You can go wherever you are, where you can just spread out with your paperwork. Or if you have all your stuff on a laptop, take your laptop, open it up. Be careful not to be doing any trading. We're not doing any trading. We're not watching the news. We're not on Facebook. We are only focusing on our trades and reviewing them and going through them. That's all we're doing. Okay, so make sure you do that. Now, one thing I want to look at is I look for patterns. What trades did I lose money on? Why? What was the reason? I should have written that down, but I want to go through all of them. I'll take all the losing trades first, and I'll set them aside, and I'll say, okay, what happened? Was it something that was my fault, or was it something that was out of my control? Was there some kind of surprise announcement that made the stock go crazy? Was it something else, something in the economy, something the president said, or something some other country did, or anything like that? Was it something in my control Did I not follow my trading plan? Did I mess up? Was I not feeling well, or did I not, was there an emergency and I couldn't go to the office, I couldn't trade that day and I messed up? Or was it that it was out of my control? Now, if it's out of my control, I'm not so worried about it, because those things happen. You're going to take losses. It's just the nature of the game. But you also have to look at how many times that happens. So if you're doing 10 trades and you lose or if you have 10 losing trades and 6 of them were outside of your control, dig deeper. Is there anything I can do to limit that? If it's the same thing, if it's, they had an earning announcement and the stock lost. There was an earning announcement. Well, then if you see that happens repeatedly, that you're losing money on earning announcements, then maybe you shouldn't be trading during earnings announcements, right? That's just common sense. So this is the kind of things that you might not see while you're in the trading day to day. While you're doing it every day, every month, trying to get better, you might not see this. But when you take a step back, when you're looking at the forest, when you're in the forest, you can't see all this stuff. But when you're out of the forest, looking at it from a 10,000 foot view, you can see, oh wow, okay, this happened good, this happened bad. Oh, look at that mistake I made over and over and over again. Let's not make that mistake anymore, right? So these are the kind of things that you're looking for. The other thing I want to look at is, how have I done, right? We all want to know that. What's the profit and loss like? Am I up money? Am I losing money? What's going on? You definitely want to know that, right? Am I up, down, sideways, what? I want to know this, but in effect, this is the most deceiving number when it comes to how well you're doing in trading. That's the first number everyone looks at. So, how'd you do last year? I made $1 million. Okay, that was great. You're a wonderful trader. No, that doesn't mean anything. You could have 2 traders. One lost 100,000. The other one made $1 million. It doesn't mean that the guy who made $1 million is better than the other guy. Maybe he just got lucky. Maybe he just bet the moon on one trade and he got lucky. So that's not the thing that we want to look at. What we want to look at, if you made money, that's great. That's the goal, right? That's perfect. That's wonderful. Keep doing it if you can. But what we want to look at is, did I stick to my plan? Did I stick to my trading plan? That's what makes me happy, when I have stuck to my plan. When I know I have a system that works over the long term and I'm sticking to it, whether I'm up or down doesn't really matter, because eventually the odds are in my favor. It's going to turn around. So if I'm losing money, but I'm sticking to my plan, I know that it's going to turn around. And eventually I'm going to come out ahead. Right? So that is why it's more important to stick to the plan if you know the plan works. Does that make sense? And I learned about this in poker. If you play poker, you know that you could play a hand perfectly and you can still get beat. And that's when people go on tilt. They're like, I played it perfectly. I had this and that guy beat me. Well, that's part of the emotions of it. You can't go on tilt, but it's okay. That happens. And it happens in trading. You could do everything perfectly. You could still lose money. That's okay. That's why we have stuff like asset allocation. That's why we have stuff like diversification. That's why we have, we don't just put all our money in one single trade every single month. You can spread it around so that if one thing bites you, you're okay, because you got other lines in the water. You got other things that are going to make up for that. And eventually, even if that one thing bites you, eventually in the long run, you're going to come out ahead because you're following the trading plan and the odds are in your favor. And the strategy just works. Right? That's why it's important to have a good strategy, follow the plan, and that way you don't have to worry about anything else. If you lose, you lose. Next month you make it back. The month after that you make it back. So if you have a good loss, if you have a good record and say, hey, if I lose this much, I'm going to get out. And if you follow that, then you should be able to get it back. That's one of the things that's really important. You cannot have, one of the things people tell me with iron condors is like, if you lose an iron condor, you lose 9 times what you could have made. Like, no, that's ridiculous. If you're going into an iron condor trade or any kind of option selling trade and you're going to say that, I'm either going to make this amount or I'm going to lose the maximum amount, well, that doesn't make any sense. Because if you lose the maximum amount, that just wipes out all those trades, all that work for no reason. So you need to have a stop loss. You need to have an amount that says, okay, if I lose this much, then I'm getting out because the trade is not working in my favor. Right? And you figure that out, what that works for you. Is it 20%, 25%, 30%? Whatever it is per trade that works out for you, that's what you have to set it at. And you have to figure that out based on your trade temperament. Are you okay with risk, or are you not okay with risk? Do you want to be really, really close and say, what, if it goes against me even a little bit, I'm going to get out? Whatever it is, you have to find out what works for you and create a trading plan that works for you. So you take a trading plan that works, take one of mine or whatever, and then you can do it the way it's supposed to be done first, so you understand. And then once you're good at it, then you can start tweaking it to go with your own risk appetite and your risk temperament. So that's another thing I look at. Some of the questions I ask myself, is my win-loss record acceptable? Okay, so if I'm doing, let's say, credit spreads with a 80% probability of profit, I should be winning 8 and losing on 2. That's what the math tells you, right? But if I'm winning on 6 and losing on 4, that tells you there's something wrong here. My win-loss is not acceptable. I need to do more research. I need to find out why, right? If you're doing, straight out buying puts and calls, and if you're doing it on a 50-50 coin flip, you should be winning at least 50%. If you're not, then something's wrong with your strategy, your trading plan, what you're doing, and you need to go back and adjust that. Another question I ask am I keeping my losses manageable? Now, we all are going to have losses. Can't get away from it. No way about it. You can do everything perfectly. You can still lose money. But are you keeping them manageable? So like I said earlier, do you have a stop loss in place that you are being strict with? If I'm saying that I'm not going to lose more than 25% on a trade, and I have 3 or 4 trades in 3 months where I lost 50% or 60%, that means I am not keeping my losses manageable. And I need to improve on that. I need to work on that. I need to focus on that. So that tells me right away, being red flag, hey, it didn't just happen one time. It happened multiple times, right? One time it could be like an anomaly, maybe you fell asleep at the switch. I don't know. Multiple times we have an issue, and it's systemic, and we need to fix it. Okay. Another question I ask are there any months or are there any circumstances in which I do better or worse? So this is something you might not normally think about. Are there any months that are better off? So is some kind of seasonality coming into play? And this doesn't just happen with commodities. It actually does happen with stocks as well. There are certain stocks that do better in certain months for option sellers than in other months. There are certain months that are better off for option sellers. And it varies by trader, depending on your strategies, depending on your risk tolerance. For me, this is when I found out, going back through a few years of records, I found out that my best month is December. That is the best month I have. That is when I make the most profits and the most of my trades turn out to be winners. It just happens, the way I trade, I do the best in December. Now, I don't know exactly why that is. I assume it has to do with, how many days off. There are a lot of days off. There's the Thanksgiving break. There's the Christmas break. There's a New Year's break in there. So the markets are closed many of those days. There's also the thing about, people are taking time off for the holidays. So they're not really they're not really at the top of their game. They're not really motivated, right? Everybody has that, I'm going on holiday kind of mentality. A lot of the traders on Wall Street, a lot of the floor brokers, a lot of the hedge fund guys, they take off, a lot of them take off the whole month of December because they already know what they're going to do for the year. They already, maybe their hedge fund or whatever has already made good money. So they pack it up and they say, all right, we're done for the year. Let's go on vacation. Let's go to the beach. And then there's also everybody being happy because, on Wall Street at least, because people are spending money left and right for Christmas. So there are many issues where it's a lot of, it's a lot of positivity in the atmosphere, a lot of relaxation in the atmosphere. So I think that is why my particular style that I like to do works better in December. But that's just something you would have to figure out for yourself after checking your results for a while. I've noticed that there are some months that are worse. Obviously, if there's a best month, then there's going to be a worst month, right? Some months I don't do good as well. I don't do as well. And so when I want to take a vacation, guess which month I'm choosing? I'm going to go in those lower months, Now, knock on wood, every month overall has been positive. So going back over the years, it's not like, okay, every October is horrible for me. But I do have more losses in October than normal. And so I think, is it October? I think it's September, actually. And so in September or October, I will cut back on my trades. I will trade less. I will go in with higher probability. I will be more on top of the ball. I will pay attention more. I will take on less other commitments. And that's just because I know my own trading habits. I know my own records, right? So I've been doing the reviews. I know where I'm strong, where I'm weak. And so if I'm weak in a particular month for whatever reason, maybe the market is just more volatile that month. Well, if that's the case, then I need to be on top of it. It's not a normal month. You'll see the seasonality. You'll see all these patterns when you do these reviews. And then you'll realize how you can adjust so that you can flatline it, because every month you want to have a winning month, right? Because the way I do it is I go month by month by month. Those are my little subsections of the year. So I want to have a winning month every month. It doesn't happen all the time, but most months should be winning months. Most years should be winning years. And if I find these patterns that can help me turn a losing month into a winning month, then that's all better, right? That makes a big difference on my whole return for the whole year. Another question I would ask myself is, are there any stocks that I should stay away from? Or are there any stocks that I should go all in on? Stocks do change their patterns from time to time. A stock could be a great stock for a year, 2 years, and then something happens and it changes, where it's not good to be selling options on anymore. That happens a lot. A new CEO might come, or they might go in a new direction, or they might sell off part of the company, or they might get into financial issues. Who knows there's stuff that goes on. For example, Chipotle, I'll give you that example. This one for me was an awesome stock for a long time. Chipotle was awesome. It couldn't do no wrong. It was just going higher and higher and higher. And I made a lot of money trading Chipotle. And then they had their health food scare. They had the E. coli breakout and some people got sick. So they closed down one store. And I was like, all right, one store, that's an anomaly. It's a blip. It's okay. Everything will be fine. But then it happened in another store and another store. And they had a whole big issue. And for a while, Chipotle was a stock that could not be traded, in my view, in a selling option sense, because it was too unreliable. It was too volatile. You didn't know what was going to happen. You didn't know if they were going to shut down more stores, go out of business, get shut down by the FDA. You didn't know what was going on. And so that was a stock that we had to stop trading. But for a while, it was great. But all of a sudden, boom, it switched. It changed. So that happens. You have to go through your results and say, okay, this stock was great for a long time. Now it's changed. So I need to stay away from this stock. Let me take it off the radar. Let me take it off my screen so that I stay away from it. Because if you say, okay, hey, I traded Apple every month for the past year, and the probabilities just didn't work out. I should have won 8 out of 10 times, and I only won 3 out of 10 times. Okay, if I'm following my trading plan, then maybe it's the stock's problem. Maybe it's the stock that's the issue, not me, not my trading. So I can take that money, take it out of Apple, stop trading Apple for a while, and put it into some other stock, and hopefully the numbers will change and I'll start making money. But you cannot be, you can't fall in love with a stock or a trade. Like I fell in love with Chipotle for a long time. I loved it. I did it all the time. I did it every month. But then it changed. And I had to realize that, and I had to look at it and say, this is not a one-time thing. This is not a one-month thing. This is a fundamental change in the stock movement. And so I had to stop completely trading it. And you have to stay on top of those things. And then there's on the other side, there's the stocks that you want to put more money into because they just happen to work. Month after month, they just happen to work. They're very calm. They're very reliable. They're very steady. And they just work. Chipotle was like that. So that would be something that, okay, I'm going to focus on this stock. I'm going to go all in on this stock. And by all in, I don't mean like 100% of your money. I mean like a little bit more than the other ones, but you focus on it. You read the headlines. You listen to the conference calls. You know what's going on. You know how many stores they're opening. You know what their, dollar per customer is. You know all the details about that particular company. so that you can tell if something changes, right? So when you know a company, you know, okay, hey, there's no big surprises coming up. I know what's going on. You can put more money to work in that company. You can maybe buy some shares, sell some covered calls, do some spreads on it, and make more money while the going is good, keeping in mind that the going could change at any time. So while it's good, you know, time to cash in, time to do that. And you might not realize that until you do your review. You know, one of the stocks that I realized I was doing really well with last year was Intuitive Surgical. This is a stock that has been doing really well, but it kind of wasn't on my radar. I was trading it, and I was like, oh, this is a great chart. I was trading it, you know, every once in a while. But until I did my review, I didn't realize. I was like, whoa, man, I've done a lot of trades, and they've all worked. They've all done really, really well. Huh. Okay. Maybe I need to do this a lot more often. Okay? Maybe I need to go research it more, learn about it more, what's going on with this company, and maybe I need to put more money to work. So that's another thing that you would find in your reviews. After I'm done with all my questioning, after I'm done finding whatever patterns I could find, then what I do is I go back to the office. And I have this software that's called OptionNet Explorer. OptionNet Explorer. And it's a backtesting software. So what you can do is you can actually go back in time to a certain day, I take all my losing trades. So let's say I lost money on my Chipotle trade. I'll type in Chipotle, go to the day I put the trade on. I can look at the chart from that day. I can look at all the option prices from that day. And then I can put my trade on as if it's that day. And then I can walk it forward day by day by day. And I can see what my trade was doing. I can see what the stock is doing. I can see how my trade is doing. How much is it up? How much is it down? What the Greeks are for that day for those options. And it's basically as if I'm going back in time and walking through the trade day by day by day. And since this was a losing trade, I can take a look at it and I can say, okay, this was happening. I should have adjusted here, but I didn't. I should have done this here, but I didn't. Oh, wait a minute, I did this instead. Or I adjusted too late, I adjusted too early. I can try to figure out why the trade didn't work out. And if it's my fault, then I can take notes and I can work on that. Now, not every trade can I actually learn something from. Some trades, you just leave it up to fate and, they just didn't work out. That's fine. But a lot of the trades, especially in the beginning when you're learning, you can go back and realize and say, oh, wow, I really messed up here. I needed to do this instead. And it just didn't work out because I didn't follow the plan or I didn't do that particular step. Or maybe I used the wrong type of adjustment. You could do one type of adjustment, maybe it didn't work out, but what if you had done a different adjustment? You can go back in time in the software and do that. So that's what I like to do with all my losing trades. This is how I like to do my reviews. Just sit back, take a few hours, go through all your paper trades, go through all your paperwork. If it's on a laptop, it's not as... That's why, you can have computerized stuff to track all your trades, but you got to have a good bit of information on every trade. You can't just say, oh, the stock was at 100 and I did the 110 calls. No. What was going on with the stock? When is earnings? How volatile has the stock been? What's the delta on the stocks, on the options that you're trading? What do you think is going to happen with the stock? Is there any news coming out? How many days to expiration? All of these types of information you have to know and you have to record it so that when you go back and you do your review, you can actually tell why stuff happened and why it didn't happen, why it worked out, why it didn't work out. Was it your fault or was it not your fault? And if it's your fault, why was it your fault? What did you do wrong? And then how can you change that to make it better? That's the name of the game. That's how we play. Put on a trade, record everything, do the trade as best as you can, and then once it's over, record, the final results. And then after a while, go back and look at all of them together. Because if you look at a trade that happened a month ago, you still remember why you did what you did. You still have some bias. Like, oh, yeah. I remember, I didn't adjust because this guy came on the radio and he said this. And I believed him, so that's why I didn't adjust. Okay? But 6 months from now, you're not going to remember why you didn't adjust. All you're going to remember, all you're going to notice on your records is, I did not adjust on time. I messed up. It doesn't matter what the reason was. It matters that you did not follow your trading plan. And I mean, if you want to write down, you could write down, hey, yeah, this guy came on the radio and I didn't adjust because of him. Well, if you have that in your paperwork and you realize that, you've been listening to this guy regularly, you'll have an idea of when he's right and when he's wrong, especially if you're logging it down. So if you go back and you say, I lost money on these 8 trades and on all 8 of them, I was listening to this one guy. Well, dang it, I got to stop listening to this guy. There you go. You found your pattern. And then the next time that you're going to review, you'll be like, oh, I didn't have any losses because I stopped listening to that guy. So that's the purpose of the review. You go back, figure out what you did wrong, see if you can improve upon it. And eventually, you want to get to a place where you don't have to review ever. But because we're human, because we're people, we're emotional, that never happens. You can always learn by going back and reviewing. Always. Doesn't matter how many years you've been doing this. You always have to go back and review. And then you can take it even a step further if you want. You can have somebody else review your stuff. Somebody that knows how you trade, somebody that knows the strategies, right? And then you give them all of your documents, all your paperwork, and say, I would like you to review my stuff while I'm not in the room and see what kind of conclusions that they draw from your trades. That's taking it to the whole next level. But you don't need to do that right now. Just focus on yours. I'm sure you'll learn a ton every time you do this. I still do, and that's why I do it on a regular basis. And that's it. Pretty simple. All right, guys. Talk to you soon. Bye. Want to know how to choose the perfect option trade for every trading situation? It's easy. Just download our free trading map and it'll tell you. Just go to optiongenius.com/map.